The world of investing is vast, filled with opportunities, pitfalls, and a myriad of strategies. Amidst all the complexities, certain investment philosophies have stood the test of time, consistently proving their worth. Dividend investing is one such approach. Whether you're a novice dipping your toes into the waters of the stock market or a seasoned investor considering a strategy pivot, understanding the power of dividends can pave the way for a stable financial future. In this video, we'll unpack the significance of dividend investing and why it continues to be a cornerstone for building passive wealth. In recent times, there's been a growing realization about the importance of investing. The need to secure our financial future and earn while we sleep has never been more critical. Interestingly, just before the pandemic shook the world and its markets in early 2020, many decided to dive into the world of investing. Some turned to platforms like Robinhood, setting clear goals of consistent investments. Beginning an investment journey can be daunting. Many enter the scene without proper knowledge, leading to a diverse portfolio without a clear strategy. For instance, a beginner might find themselves with a mix of 20 or more stocks, some of which offer dividends and others that don't. On a side note, it's not uncommon to have a varied portfolio like this, often stemming from custodial accounts set up during one's younger years. However, clarity is crucial in investing. Understanding why one is buying a particular stock or asset is pivotal. Sadly, many learn as they go, missing out on formal financial education that would have proven invaluable. It's essential to understand that the world of finance and investing offers ample resources. Institutions like Southern New Hampshire University offer comprehensive finance programs, equipping individuals with the knowledge they need to thrive in the global economy. Transitioning to the primary focus, dividend investing has emerged as a dominant strategy. By January 2021, many realized the power of dividends and began focusing their strategies around it. Reflecting on this, it's clear why dividends are so appealing. Passive income. The allure of earning without active effort is immense. Receiving dividends feels like getting paychecks for merely holding on to stocks. Added dimension to investing. Dividends provide a steady cash flow, ensuring investors don't solely depend on capital appreciation for returns. Long-term benefits. The right dividend investments can continue compounding, potentially setting up generational wealth. If one were to go back to early 2020, knowing the benefits of dividends, a different approach would emerge. Instead of a scattered portfolio, a focused one might have just 4 primary holdings. Established entities like Bank of America, Procter & Gamble, and Starbucks, with a major chunk, say 70%, in diversified funds like SCHD. This not only simplifies management but also aligns with familiar brands and products that one might use daily. Some argue beginners should solely focus on ETFs, and while there's merit in that, there's also value in holding individual stocks, especially for those keen on researching and understanding companies. Take an example. With a starting amount in 2020 and consistent weekly investments, by 2022, one could have seen significant growth in their portfolio. However, it's worth noting that there's no one-size-fits-all strategy in investing. Some portfolios outperform others purely based on market dynamics and a bit of luck. What's undeniable, though, is the potential of dividend investing. Over the years, as one reinvests dividends, the impact of compounding becomes evident. This dividend snowball effect sees your investments grow exponentially over time. Hey there! If you're finding this video insightful, please consider subscribing to our channel. Your support helps us create more content like this for you. Don't forget to hit the notification bell to stay updated. Delving deeper into the mechanics of dividend investing. When we talk about dividend investing, it's essential to move beyond the surface and understand the underlying mechanics that make it a potent wealth-building tool. By understanding these nuances, investors can make more informed decisions and leverage dividends to their maximum potential. Understanding dividend yield. Dividend yield is one of the primary metrics used to gauge the attractiveness of a dividend-paying stock. It represents the annual dividend payment as a percentage of the stock's current market price. Higher yields can be alluring, but it's critical to analyze the sustainability of such dividends. A company offering an unusually high yield may be doing so at the cost of its future growth, or may be masking underlying financial problems. Dividend payout ratio. Another crucial metric is the dividend payout ratio, which measures the proportion of earnings a company pays out to shareholders as dividends. A lower payout ratio can suggest that the company retains a substantial amount of earnings for reinvestment, indicating potential future growth. Conversely, a very high payout ratio might suggest the company is paying out more than it can afford, which could be unsustainable in the long run. Dividend growth rate. For long-term investors, the dividend growth rate is pivotal. Companies that steadily increase their dividends over the years demonstrate not only financial health, but also a commitment to returning value to shareholders. Such stocks can be gold mines for those practicing the dividend reinvestment plan, DRIP, where dividends are used to purchase more shares, thus enhancing the compounding effect. Diversification in dividend investing. While the power of dividends is undeniable, it's equally vital to ensure diversification in your dividend portfolio. Industries and sectors go through cycles, and while one might be booming today, it could face challenges tomorrow. By spreading investments across various sectors, one can hedge against sector-specific downturns and capture growth from multiple fronts. Dividend Aristocrats and Kings. These are companies that have not just paid, but also increased their dividends consecutively for 25 years. Aristocrats, or 50 years. Kings. Such a consistent track record of dividend growth indicates robust business models, resilience during economic downturns, and a clear emphasis on shareholder value. Tax implications. It's also essential to be aware of tax implications associated with dividends. Different countries have varied tax treatments for dividend income. In some jurisdictions, qualified dividends might benefit from lower tax rates than ordinary income. Understanding these nuances can significantly influence your net returns. Reinvesting dividends. The power multiplier. One of the most potent ways to harness the power of dividends is by reinvesting them. As mentioned earlier, the dividend snowball effect is where the magic happens. When you reinvest dividends to buy more shares, you receive even more dividends during the next payout, which can then be reinvested. This cycle, over time, can lead to exponential growth in your investment. The importance of patience. Like any sound investment strategy, dividend investing is not about quick wins. It's a long-term game. Market volatility might affect stock prices in the short term, but the consistent inflow of dividends provides a cushion during downturns and a means of purchasing more shares at discounted prices. The risks of dividend investing. While there are numerous benefits to dividend investing, it's not without risks. Companies can cut or eliminate dividends, especially during economic downturns. Hence, it's crucial to assess the company's financial health, debt levels, and payout ratios to gauge the sustainability of dividends. In wrapping up, dividend investing offers a compelling mix of current income and potential for capital appreciation. By focusing on robust dividend-paying companies, diversifying across sectors, and religiously reinvesting dividends, investors can build a solid foundation for their financial future. But as always, due diligence, continuous learning, and staying updated with market trends is key to success in the dynamic world of dividend investing. If you've been nodding along, resonating with this narrative, and wishing to dive into the rewarding realm of dividend investing, then why wait? And if this video brings value to your investment journey, don't forget to hit the subscribe button to stay updated with Dividend and Conquer. As we draw to a close, I leave you with a question. What's been your biggest learning or challenge in the world of investments? Comment below, share your story, and let's foster a community of knowledge sharing. Remember, we are not financial advisors, and the content presented in this video is for informational and educational purposes only. Always consult with a licensed financial professional before making any investment decisions. For those who've been tuning in with us, a heartfelt thank you. If you're new here, welcome to the family. Dive into our previous videos for more knowledge bites, and don't forget to ring that notification bell so you never miss out. And as always, keep those dividends rolling, and let's conquer the world of investing one stock at a time. Until next time, stay savvy and keep investing wisely.